episode. And on this episode, we are going to look at the various asset classes that are there. And these asset classes, these are the areas that we owe to invest in, or the areas that one can invest in this journey to financial freedom, or in the journey to wealth creation. And asset number one is cash and cash-like assets. And these are the money that we hold in our current account, in our fixed deposit account, in our various accounts, in our mobile platform. And this cash is generally used to meet the emergency needs that comes our way. So this money is readily available, and we use it to cater for the emergencies that come our way. And there is the risk to this money, it's close to zero, because there is no risk of losing this money. And one thing that I want to put forward about cash is that it is highly affected by inflation. That means it loses value over time because the money is lying dormant in your account. Next asset class, this is equities or stock. And with equities, this is whereby you invest in shares of a particular company. And with this, the investor is tasked with the responsibility of analyzing the performance of this particular company where your interest is investing. So when this company trades and it makes profits, the investor earns dividends, and the dividends are paid semi-annually, like twice a year, mid-year, and the final dividends at the end of the financial year of that particular organization. Also, the investor earns capital gains. This is whereby you have bought shares of a particular company. Say, for example, each share was costing 20 shillings, and over a period of time, the shares appreciates in value to 30 shillings. This means the shares have appreciated with a difference of 10 shillings per share. This is what we call capital gains. Now, for one to invest in shares, the investor is tasked with the responsibility of analyzing different companies so that one knows where to invest, which companies are doing well. So one needs to really get to know before investing which companies to invest in. And in case one does not have this knowledge, there are those people who are tasked or does invest for their customers, like brokers. We have those companies that do deal in shares. So one can hire them to help mitigate the risk, to help analyze, and this will shield you from making mistakes which could lead to losses. So an investor earns dividends, and there is also capital gain. And it's also good to note, when one invests in capitals and shares, this could lead to massive wealth creation, especially where one picks companies that are doing well and you invest well. This could lead to wealth creation or wealth generation. The next class of asset, this is the earned income. And this is whereby you invest your money, and while you invest this money, you are paid interest on this money. And this is basically like where you invest in government bonds or corporate bonds. Also, we have those short-term ones, which are treasury bills and treasury bonds, which takes a shorter period of time. So when you invest in this asset, you get to be paid interest on the money that you have invested, and this money is invested within a particular period of time. When the period lapses, you are paid the principal amount, whereby you've been also receiving the interest as per the period that you have agreed on. So with this, I mean to say, you invest in treasury bills, the treasury bonds. We have corporate bills and corporate bonds. You are paid interest, and upon maturity of the period you agreed, the principal amount is paid back to the investor. Next class of asset, this is real estate. And when we are talking about real estate, this is whereby you invest in physical assets like land, you know, you build residential house, apartments, residential apartments, commercial buildings, and we also have nowadays the Airbnb apartments where we rent out these assets. Now, one thing we need to know with real estate is that it is capital intensive, you know, and the risk the risk with real estate is minimal, unless an event happens, or in rare cases one suffers losses. And where the areas where one can suffer losses is whereby the apartment or the asset, the geographical location or is not strategically located, and by this you find out that you are not able to get customers. So this means if you had an apartment and there is no customers, it means no income to the investor. So basically, when you invest in real estate, the asset appreciates in value, and only in rare circumstances one suffers losses in case of poor location, you know, or natural calamity. Like previously we saw in some areas where the water bodies shifted and it did swallow some of the apartments, it did swallow some of the residential homes. Only in such cases, that's when one can suffer losses. So the rental income is the reward from this asset class. We've said it is capital intensive, you know, and when one resells the asset, you sell it at a higher price, and thereby one earns a gain from that. And next asset class is commodities. These are tradable items that are used to make other products or other goods. And these commodities, they are classified in three categories. We have energy, we have agriculture, and we have metals. Examples of agriculture, we have examples of corn, we have wheat, we have coffee, and for energy, we consider oil, gas, you know, and for metals, there are metals like gold, we have silver, and the like. And one thing with these commodities, they are price sensitive, you know, and they are affected by the forces of demand and supply. And for agricultural products, they are perishable in nature. Some of these are perishable in nature, meaning they cannot be traded with or kept for a long period of time, and they are traded for short-term basis. For gold, this one is used to store value, and it can be traded for a long period of time. And it's also good to point or to note that gold is used to store value, and it is not affected by inflation. You know, those are the 5 commodities. We have the cash and the cash-like assets. We have stocks and equities. We do have earned income, where we trade in treasury bills and bonds and corporate bills and bonds. We have real estate, where we invest in physical assets like land and building apartments, either commercial or residential, we do have commodities. So those are the 5 classes of assets that we should look forward in investing in any of them, and as per our suitability. And by so doing, this enhances that want to diversify our asset portfolio. So we can invest in some real estate, in commodities, some treasury bills and bonds, and all these income results to financial freedom. Thanks so much for taking your time to listen to me, to watch this video. I request you consider sharing this video with our friends and family. Consider giving it a thumbs up, like the video, and I will really appreciate. Thanks so much for your time. See you in the next episode.